I think a big aspect in real estate investing is the promise of cash flow and mailbox money. And cash flow is great and I love it, but it's really not how you build extreme wealth in real estate. It's really through the equity appreciation in a property and paying down debt over time, and then the extreme tax benefits that you get by investing in real estate.
Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
Welcome back to the Real Estate Pros Podcast. I'm Cody Crabb with Investor Fuel, and today I'm joined by David Hamer, who is the owner and operator of Expedition Capital. David focuses on value-add multifamily investments across multiple markets, but what's interesting about David is he didn't jump in early. He spent years around real estate before he actually pulled the trigger, and now he's actively building, he's raising capital. This is going to be a great episode. We're going to talk about how he evaluates deals, what he's seeing on his side in the market, and where operators are getting themselves into trouble. So David, thank you so much for coming on the podcast today. It's a pleasure.
My pleasure. Thanks so much for having me today.
Of course. So I want to start here. Now that you're actively in the game, when you look at deals today, what actually makes something worth pursuing for you?
Yeah, it's a great question, and it's really important to have your underwriting criteria nailed down. For me, market is really kind of the most important factor. And so what I look for is markets that are growing in population, in job growth, have good demographics. And I also look for landlord-friendly states where you're not going to be punished by being a landlord and trying to rent out space to tenants. So those are really the key factors that I look for kind of on a macro basis. On a more individual basis, I really like value-add deals. So looking for a property that needs some tender loving care, that has been a little bit neglected by the existing owner. Maybe they've owned it for a long time and are comfortable with the property and making good profits off of it, but haven't invested a lot of money into it over time and have maintained below market rents because of that. So you can come into the property, buy it at a decent price that will still provide a nice profit to the seller, and put some money into improving the individual units, improving the exterior, and lift the rents up to market rate and make a nice profit by doing that. So on a more individual property basis, that's really what I'm looking for, is a value add potential in a multifamily property.
Interesting. So in that case, what would you say no to? Like that's a question that comes to mind.
Yeah, more of a stabilized property that's probably Class A, and the rents are already at market rate, and definitely in a geographic area that I'm not interested in. So that I can pass on pretty easily. But as for an individual property, any multifamily deal where the rents are pretty much stabilized at market rents, and if you come in and buy it, yeah, you get a decent return, but there's not tons of upside and not the potential to improve the property and increase rents substantially, thereby increasing the overall value of the property. So that's something that I pretty much pass on at this point. I really want to see that value add potential in the deal. And there's lots of different ways to do that. I mean, it could just be being run poorly and the occupancy's down because of that, or the current management is not, increasing to market rents, even though the building itself is in good shape. But for the most part, it's typically you need to do some type of improvements to the property, whether it's the interior units, the exterior, or a combination of both, adding some amenities or whatever it is to increase the value and increase the rents on the property to increase the value.
Okay. So, when you, on the deal side, are you seeing like enough opportunities on your end, or is it, what's the typical deal that you're seeing right now that is like in the market? Because I'm interested in knowing, like, are you seeing what you want to see, or are you having a hard time finding them?
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
Yeah, it's been a tough market, as most people know, especially in multifamily over the past couple years. And I feel like it's just starting to open up a little bit now, and some more deals are coming on the market that are of interest to me, although there's probably still a difference between what the seller wants for it and what it's probably actually worth and what I want to pay for it. So I have not been aggressive over the past 12 to 24 months in looking for deals and purchasing anything. But I do feel like that the market is opening up and buyers and sellers are getting closer. And I think there is going to be a lot of opportunity over the next, call it 24 to 36 months. But no, it has been a tough market to find existing properties, to find new acquisitions, and just a whole lot of aspects of multifamily investing have gone against investors, not just interest rates, so that's been a big part of it, but insurance costs and overbuilding in some areas, and all that have impacted the opportunity to find good investments. So again, I haven't been aggressive in finding anything recently, but I do think opportunities are coming here pretty soon.
Okay, so let's just kind of do a little bit of a rewind. I would love to hear about like kind of how your intro into this world. What made this that you mentioned to me in the pre-podcast chat that you had hung back a long time on the edges of real estate. You kind of like thought it was a good idea. You wanted to kind of get into it, but you never did. So I'd love to know why that is, and maybe give us a little of your story as well.
Yeah, absolutely. I think it's a very interesting and it provides some good lessons about real estate investing as well. I've been involved in the real estate industry for almost my entire working career. I worked as an accountant for a few years, but specialized in real estate before going to work for a commercial commercial real estate company. And while there, I read the book Rich Dad, Poor Dad, like so many real estate investors have over the years. And this was just a few years after it came out. And I said to myself, that's what I want to do. I want to build wealth through real estate. I want to invest in real estate. I'm going to do it. And I was all gung ho about it and ready to go out there and buy everything in sight. And then it kind of got smacked by real world reality about that. So I live in the Southern California area in the Los Angeles market. And I started looking for, and this is 25 years ago, started looking for properties, small multifamily properties in this area. And, even back then, couldn't find anything that could cash flow. Everything was so expensive. Was wondering, how am I even going to save up enough for a down payment on some of these properties? And started to get a little bit discouraged, and kept looking for a few years and just couldn't find anything that made sense. And then the global financial crisis hit, and real estate took a dive, and that discouraged me even more. So I didn't do anything with respect to real estate investing, even though I was working for a real estate company for 15 years years I waited. And then finally, at that point in time, I was listening to some real estate podcasts, and they just, one of the hosts said, you just got to go out and do it. You just have to go out and take the plunge and buy your first investment property. And maybe it will work out great, and maybe it won't, but at least you'll learn, you'll get a lot of experience, and most likely you'll continue moving forward from that point if you just finally take the dive and do it. And so I made a commitment to myself. I said, I'm going to, in the next 12 months, I'm going to purchase an investment property. And that's what I ended up doing. So again, I was looking in the Los Angeles area, couldn't find anything. So I ended up having to look outside of California to find my first investment property. And I did. And fortunately for me, it worked out great. And since then, I've been able to build up a nice multifamily portfolio, even though it took me 15 years to invest in my first property. Over the last 9 years, I've been able to purchase several more and build up a nice portfolio.
If you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency. It's the most sophisticated, data-driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
See, that's interesting because I think a lot of people get stuck there at the hesitation part, and sometimes all they need is just this little tiny, you can do it, and then just if it hits you the right time, that's all he needs. So now that you're actually on the other side of that, I'm curious, like, what do you think people are still getting wrong today when they finally do start investing?
Yeah, a couple of different things. I mean, first, I think a lot of people think I don't have enough money to invest in real estate, and you really don't need that much. If you're going to go out and try to buy a, $100 million property all on your own, then yeah, most people probably aren't going to have enough. But you can start small and you can get into properties with not a lot of money, and there's partnerships and there's syndication deals where you can invest without a lot of money. But really, it can be a joint sport, a joint investing process to allow you to get in without having to have tons of money. And then I think a lot of people don't realize the access to money that they have, whether it's through retirement plans or whatnot, being able to invest through retirement plans, which is certainly allowed. So lack of money is one. I think a lack of knowledge is another. A lot of people think, oh, I just don't know enough about it. I don't know how to do this. And again, that's where you can certainly educate yourself and learn about real estate investing. And the best way to learn about it is to actually do it. And again, you can start small and learn about it, but you can also partner with people and partner with someone like me who has the knowledge and is willing to share it, and that then can shepherd those novice investors along who are interested in real estate investing because they've heard about all the benefits of it, but don't have the confidence themselves to do it on their own. So that's the money and the knowledge are the two things that I feel hold people back the most. And then a third is I don't have enough time to do this, because everyone hears real estate investing is passive income, and it's really not passive income. You do have to put some time and effort into it. Even if you're just investing in someone else's deal, you still have to learn about it and do your own due diligence. But time is another factor. But again, partnering with other people who do this on a regular basis and can spend most of the time involved in investing in a deal can solve that problem as well.
So just out of curiosity, our audience is mostly new real estate investors. So where do you think people are too optimistic? Because you said a lot of people are too negative, like, oh, they feel like they don't have enough money or something. But where are people way too optimistic? Like, oh yeah, this is going to be fine, and they're not expecting to get blindsided by something.
I think a big aspect in real estate investing is the promise of cash flow and mailbox money. And cash flow is great, and I love it, but it's really not how you build extreme wealth in real estate. It's really through the equity appreciation in a property and paying down debt over time, and then the extreme tax benefits that you get by investing in real estate. So I think a lot of people think, oh, I'm going to invest in a single family home, and it's going to produce tons of cash flow, and then I'm going to be able to every year I can do one of those, and in 5 years I can leave my job. And they just don't produce enough cash flow like that to do that. It may look good on paper, but then you have a hot water heater break, or you need to put on a new roof and it eats up like 1 or 2 years of cash flow. But really, if you look back over time after holding that property for 10 years, it's gone up in value, and you've paid down the mortgage, and you have a lot of equity in that property that has increased your wealth tremendously. So I think a lot of people get fooled with cash flow and are overly optimistic on that. It's not to say that real estate doesn't produce nice cash flow and that there are tax benefits, but that protect that cash flow from having to pay taxes on it, and that does exist. But I think some people are overly optimistic about how much cash flow they're actually going to make, and don't realize what's the other benefits that are even bigger are in real estate investing.
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
Mm-hmm. Yeah, and so can you think of a deal that maybe you've done? I like getting on like boots on the ground, real stories and stuff too. Can you think of a deal that you've done where where expectation didn't really match reality? Like it was maybe not exactly what you expected it to be?
Yeah, I mean, it always happens in real estate. If you do enough deals, some are always not going to be as good as the others, and some are going to be kind of disappointing. So unfortunately, a multifamily deal that I did 3 years ago is still a work in progress at this point in time, and not kind of hitting the pro forma estimates that we have projected. And there's a variety of reasons for that. Some of it is market conditions, and there was overbuilding in this geographic area, which has impacted rents at all levels and occupancy levels as well. And some of it has been on the management side, which is also a very underrated aspect of real estate investing is if you're not going to self-manage the property yourself, and if you are, that's a lot of work and takes a lot of time and effort. But if you're not, you need to select a good property manager for your properties. And all my properties are managed by third parties, not by me personally, even though I oversee them. But selecting the right manager is a key aspect, especially when you're talking about a multifamily property that has multiple tenants and multiple sinks and toilets that can break, and multiple pieces of equipment that can break as well, and constant turnover with respect to tenants depending on the size of the building. So you really need a good management company in place to be able to deal with those woes. And quite frankly, I probably haven't chosen the best managers. Some of it was out of my control, the issues that arose after they were hired, and others just not picking the. So I have gone through a few different management companies on that property in order to find the right one. But fortunately now, I think I do have the right property manager in there, and we're making progress on getting that property up to the level that we hoped it would be and expected it to be, but it's just taken a lot longer than originally anticipated. And of course, that impacts your overall returns on the investment.
Yeah. And so just for anyone listening, I mean, what the property management sounds like a really good idea on paper, and especially like maybe you're not local or something, you have no choice except you have to do that. I would be curious to know what qualities do you look for now that you've had a bad version of this? What qualities do you look for now in property managers?
Yeah, I mean, choosing the correct property manager is probably, one of the most essential, if not the most essential functions in real estate investing here, if you're not going to manage yourself, and especially if you're doing it remotely. And so what I look for, I mean, first, I ask the brokers that I work with and know in the area who the best property management companies are. And then what I look for is ones that have managed similar buildings to the one that I'm buying or the one that I own, and in the same general geographic area, dealing with the same type of tenants that are in the building that I'm going to purchase. And then I also like to understand, what their reporting is, how often they report, what the communication is, how often they're at the property, visiting the property, or if it's big enough, what the on-site management looks like. But really, I tell my property managers that the two most important things to me are to keep the property filled, to keep vacancies to a minimum, and to make sure the rent is collected on time. Now, yes, of course, I want them to respond to problems at the building, with tenants or if there's leaks or whatever as quickly as possible, and to maintain the interiors and exterior of the building as nicely as possible. But I say if the building's full and full occupancy and rents are being collected on time, you're probably never going to hear from me. If those two things aren't happening, then we're going to be talking a lot more often. But you do have to stay on top of, even if the building is 100% full and every tenant is paying their rent on the first of the month, you need to review the reports. You need to make sure that the cash that's coming into the owner's bank account matches up with what's being reported. And then I truly believe you do need to visit the properties at least once a year, even if you're not, even if you're a remote investor, because that's very important, just to make sure that the building's being well maintained, and to let the property manager know that you're on top of things, you're overseeing it. So you do have to continue to provide oversight over the property manager.
Yeah, for sure. Oh, those are some really good tips. I hear a lot of people say like buying out of state where it's cheaper or something, and then they don't act like they're ever going to go there in person. And I'm like, that's maybe not a good idea. Yeah. And like you said, you can get so much more information just physically being there. And so I think that's a great tip, making sure you visit at least once a year. So looking ahead over like the next 1 or 2 years, what do you see yourself doing? Are you planning on getting more aggressive? Are you still staying pretty selective?
Yeah, I'll probably stay pretty selective. It's not in my nature to want to be too busy and to grow too fast. So while I love real estate investing and I love working on deals, I also value the freedom that real estate investing gives me to be able to, spend time with the family and do other personal things. So, I tell everyone, if I can do 1 or 2 deals a year, buy 1 or 2 new properties every year, I'm pretty happy with that. That occupies enough of my time, keeps me busy, kind of satisfies that investor bug in me without occupying too much time, and gives me enough time to, provide asset management and oversee the rest of my properties as well. So even if it was a very hot market and there's tons of great deals out there, I'm still going to be selective, looking for the best deal, and probably only do 1 or 2 deals a year and offer that as an investment opportunity to my potential investors. But yeah, I'll be selective no matter what. And this is certainly the market to be selective. But I think, as I mentioned earlier, that there are going to be more opportunities here coming up pretty soon.
Yeah, totally. So because our audience is mainly real estate investors that are kind of early in the journey, for someone that wants to get into multifamily, but they want to do it like the right way, I'd love to hear what advice you would give them to focus on first.
Yeah, I mean, I think the best way to get involved in multifamily, especially if you're a newer investor to real estate, is to find someone who's been doing this for quite some time, has a track record, has the experience, and then leverage that knowledge, that experience, and their investor base as well. And you can potentially invest with them, or you can partner with them, or just, seek out knowledge from them and determine which route you want to go in terms of investing in multifamily. And multifamily can be just buying a duplex or a four unit apartment building. And that's something that, you probably can do on your own. But again, if you don't have the confidence, partner with someone, invest with someone else, or at least try to leverage the experience and expertise of someone who's done this for quite some time.
Yeah, that mentor-mentee, or just kind of partnering with someone that really knows what they're doing. That you're letting their experience, like go through to you. Like, you don't have to make the same mistakes they did, is what I was trying to say.
For sure.
This has been really great. Thank you so much for joining us here. So, if people want to connect with you, who would you like to connect with you, and where can they find you online?
Sure. I mean, I'm happy to talk to anyone who's interested in multifamily investing. I love talking about real estate, as you can tell. So if you just want to, again, leverage my expertise, absolutely. But if you are interested in investing in multifamily properties as well, happy to have a discussion to see if we're the right fit for you. You can find me on LinkedIn or go to my website. It's at www.expcapitalllc.com. And I also have some free educational resources on there.
Nice.
You can take a look at the properties that I own, and happy to schedule a call with you as well for anyone who's interested in learning more about multifamily investing or in potentially investing in one of the opportunities that I find.
Yeah. Well, thanks again so much for coming on and being real about how this actually works, especially the parts that are not like the ones that go perfectly, because that's what it's great to share those things. But also we need to hear the mistakes. We need to hear stuff like that, because that's what prevents us from doing stuff in the future. So thanks so much for sharing that, being open with that. And so for everyone listening, if you got some value out of this, which I know you did, please make sure you're subscribed to the Real Estate Pros YouTube channel. Catch future episodes and more conversations like this. So once again, David, thanks so much for being here, and we'll see you another time.
My pleasure, Cody. Thank you so much.
Thanks.
Thanks for joining us for today's Real Estate Pros Show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing for your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. If you're interested in joining us as a guest of this show, please visit investorfuel.com/pros to apply. You can also check the show notes for access to free resources, how to get access to world-class lead generation, and much more. Don't forget to subscribe so you never miss another episode. Have a great day. We'll see you on the next show.